Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on out there? It's April 1st. I'm Frank Kersey, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. It's really interesting in the change in sentiment that I'm seeing over the past week. Not just in the financial media, but also from many of you, who I'm encouraging you to email in, let me know what's going on. I'm getting hundreds and hundreds, if not over 1,000 emails. Unbelievable, guys. I'm trying to answer all of you. I know you just know how busy I am, the research end, but just let me know what's going on in different areas. It helps tremendously when it comes to our research, what people aren't seeing. This is real-time data, guys, that people who run businesses, let me hear from you. Let me hear what's going on in your neck of the woods where, we hear what's going on in New York and California and now Louisiana and certain places, but it's important to keep track of everything because now Louisiana is becoming New York, and who knows if another state's going to become that, especially pretty big deal if we're looking to open up the markets after this month, right? After April. It'll be hard to do if you see other states start getting infected, like New York, like California, which we're seeing in Louisiana now. But the sentiment that I'm seeing, okay, and again, from not just the media, listeners, subscribers, where the fear is not the market's going to come down even more. What are we going to do if the market comes down? What's unemployed? That's not it. That's not the emails I'm getting. That's not the fear. Okay, it's not the nervousness of how much more this market come down. That was maybe the first 2 weeks in March. I got tons of those. But now the sentiment has turned to FOMO, which is fear of missing out. I can't tell you how many emails I got saying, hey, Frank, thank you. We listened to you early on in February. One of the few people that tell us to sell in early February. I mean, some fantastic emails. People tell me the amount of money that they saved. Really, it's just, if I had to put a number, it's more than $10 million in terms of our whole entire subscriber list, just from the emails that I've got. I'm hoping that it's even more than that, but, awesome. I mean, really, really awesome. You guys are well positioned. I've always said bear markets are great for people who are prepared. Well, you're prepared. But now the emails are turning to, hey, Frank, this is great, but I'm a little worried about missing out. You warned of that global recession. We have it now. The U.S. is going to have more cases than China, which we do. We're going to blow that number out just away, especially over the, we're already higher than China, but wait. I mean, we could be 2-3 times to China when all is said and done. It's crazy. But it's just funny how, when I'm watching the financial media, how much this has changed. It's all like, when do we get back in? Maybe again, Frank, I trust you. I just want to know when to get back in. I don't want to miss out. Look, I get it. Many of you have cash on the sidelines. You're seeing names you thought about buying maybe in January or late last year. They're now 25%, 30% lower. You're seeing tons of stimulus come into the markets, backstopping certain sectors, industries, even some stocks like the airlines. We also saw an amazing, unbelievable 20% move higher in 3 days. I mean, insane. We're pretty close to 20%. And that was before the last 2 days where stocks have sold off. I'm doing this on Wednesday, trying to get these things as close to real time as possible. If you're a subscriber, I'm doing video updates now for my newsletters because, writing 10, 12, 15-page reports, the time we write this, so much has changed. It changes in 2-3 days. It's crazy. I'm getting used to the 1,000-point swings in the market on a daily basis. I'm going to have one today. Right now, I'm looking at it, and we're down around 700 right now. Going back and forth, down 200, 700, but it's going to be another 1,000% move. Very difficult, right? To really get information out to you as soon as possible. So that's why, again, I'm doing this Wednesday, seeing the markets pull back the last 2 days. But getting back to the point here is, I get it. I get that you're anxious. I get that you're watching TV and hearing things like near record inflows of cash poured into stocks last week, record insider buying, how in May things are going to get much better, where infect cases are going to peak, start coming down. How the second half of the year, we're going to see incredible growth The economy gets turned back on. Everybody starts working and spending money again. This is what I felt 3 weeks ago, 4 weeks ago, until, again, this is something where you have to be able to change your mind in a day. You could be along a stock you think is fantastic, and data comes out. You have to be willing to change. You have to. Don't let your ego get in the way and say, oh, it's all right, I'm going to be right. No. Things change. And they're changing on a daily basis. So you can't have like an investment strategy say, no, I'm looking to go all in, and then realize that, 3 that nobody knew about, kind of like an AIG situation, when nobody knew that they were insuring everything during the 2008 crisis. GE, commercial paper, they couldn't pay their employees. The whole market froze. I mean, we thought we were doing a good deal letting Lehman fail. That lasted for a couple of hours before the entire market crashed and everything was linked to each other. But looking at TV and listening to this, I get the optimism out there. I do. I really do. Right? I think it's kind of crazy that so many people are listening to those so-called analysts and great people that didn't tell you this was coming. And so many of the people that I know, and a lot of my friends that I've been doing podcasts, and that's how they felt, and that's fine. But just buying on the way down, and certain sectors are going to do good. And this is the greatest. How many times have we heard this is the greatest buying opportunity over the last 3 weeks? Over the last 3 weeks. I mean, it's crazy. And this is before. If you take into account the 20% move up, this is before. You're still down. It's, I'm not talking about from the top of the market, but as it was coming down, it's just, it's a great buying opportunity. It's awesome. So we keep hearing that. So I get it. I get the optimism out there. I understand the questions. But the research I've been doing in this particular subject, and it's coronavirus, the health impact, the economic impact domestically and globally, the political response, the stimulus, the numbers, interviewing doctors, experts. And we've been ahead, way ahead from most of the people out there and most of the firms out there. Much, much ahead. If someone's been more ahead than us, let me know. I'd like to know because I want to follow them. I haven't seen. I'm not saying that to pat myself on the back at all. What I'm saying is I want you to listen to my message right now, especially for those from the FOMO crowd, the fear of missing out, worried about, I'm not going to be able to buy these stocks at cheap levels. Okay? Hear me out. Again, I don't have a crystal ball. I could be totally wrong on this, just like when I told you to take profits in February. I said, guys, the risk reward is favorable because if this coronavirus is bad as it's showing up in my research, you're going to thank me tremendously. And there's a lot of names that are going to fall 30% plus. I said, but if I'm wrong, the market goes up a little bit and we'll know it. The virus got contained. It was limited to China and everything's okay. Trading at 19 times forward earnings from a risk reward standpoint, I thought it was a great idea. Right now, again, we're down 25%. Is a lot of this stuff factored in? I don't know. But at the end of the day, we really can't predict the future. We just look at all the data, all of our sources, and I feel like we got the best sources around in terms of doctors and people, just you guys emailing me all the time and around the country that helped us, understand what the impact of this when it was in China early on. But this message I'm going to say, I want you to listen to because I am almost certain that we haven't hit a bottom yet. Again, it might sound crazy, down 25%. Just hear me out. When we look at almost every past recession, you go to 74, 91, 2002, 2008, we always retest the lows. Always. Doesn't come straight down and everything's okay. Throw stimulus at it and everything goes higher and we're okay and we're out of it a couple of years later, everything's fine. And let's take 2008 and follow me here, okay? It's important that you follow me because I'm going to throw some numbers out, but you're going to see why this makes so much sense. So in 2008, people believed that the market crashed in 2008. It was terrible. And then, went up a little bit towards the end of the year in January, then crashed again another 30% into March before we hit our March lows. But here's what really happened. From January through March, the S&P 500 fell from 1,400 to 1,280. Then from March to May, it actually went back up to 1,400. Incredible move, 1,280 to 1,400. From May to June, we retested the lows, falling from 1,400 to 1,280, broke through those lows. And by November, the S&P was trading at 750. But then we had a strong move from November to January, from 750 to 825. And then, as I just said, from January through March, we had a final collapse from 825 to 666, which was the absolute low. Why am I throwing all these numbers at you? If you're looking at the actual price movements, if you're looking at the events that took place, okay, and this is why I'm wasting so much time going over the details here. Every one of these moves was based on significant news. Okay, we thought in 2008 that, hey, we have a quick move to the downside early on. This is limited to mortgage companies. The housing market would take a hit. Okay, fine. That's what everybody thought. Most people did. Yeah, you could read about a couple of traders, again, Big Short and everything. A couple of traders got it right. Then we realized by mid-August, and by the way, those guys in Big Short, it was mostly like into 2008, well in 2008, when they really started understanding the market. But we realized by mid-August that the entire investment banking community was invested in these shitty loans that were leveraged 30, 40 times, synthetic CDOs, and all this crazy stuff. Yeah, this subprime debt. And we're like, whoa, a lot of companies have exposure to it. So we went down again, right, which is a surprise. In September, we let Lehman fail. And we also passed TARP around the same time. We thought, hey, government's in here, $700 billion package. Finally, politicians agreed after the market crashed, kind of similar to this event. And we thought that could be a bottom. Then we find out the entire financial system was frozen after we let Lehman fail. And then companies like AIG, GE had tons of exposure. GE, commercial paper, company employees. So money market funds fall, break that dollar peg. We had AIG insuring the whole industry. They had no idea what was going on. They were just like, wow, why is everyone giving us free money? We're insuring all this stuff. So all the bankers, they knew the shit was hitting the fan. They insured themselves through AIG. They didn't realize AIG was insuring the whole entire world and that they wouldn't be able to pay out. And that's why the whole financial system almost collapsed. But people forget that time. I mean, the news flow was insane. The emotional roller coaster was insane. I mean, the experts, the analysts, they thought they had everything under control, even the Fed, even the Treasury. I mean, before they realized, they were going, AIG, what's going on? What the hell? Oh, we let Lehman fail? Wow, that's good right now? Wait, the whole market's frozen? And then more and more problems just kept popping up. Now, why am I bringing up this event? Because it's very significant. This was a black swan event in 2008, just like it is today. We've seen a 35% market crash, followed by, a nice move to the upside, but we're still down around 25% in total right now. We've seen the government throw trillions at the problem, 3 different phases, but basically trying to backstop as much as they can, especially small businesses. But my question to you, before you want to jump in and you have all this fear missing out, simple question. Do you really think this problem, a problem that's never happened in the history of mankind? And when I say the history of mankind, yes, we had pandemics. That's fun. We've never had total countries shutting down for months, ever. We don't know the effect of that. We're still not going to know the effect of that. But do you really believe that this problem, which is still not even close to being under control, could be solved in 1 month? You really believe that? Do you think we're not going to see things like we saw in 2008, just pockets in the market that are significantly impacted that we don't know about yet? And we know that companies like Cheesecake Factory, Subway, H&M, they already said, look, we can't pay rent. And the government's like, hey, no problem. We got you back. And make sure you don't fire employees because we got their back too. Again, all these trillions of dollars being spent that the government's not going to make back, right? I mean, the worst thing here is the government made, and I said this numerous times, the worst thing that happened during the credit crisis is the government made money on everything they invested in. So what do you think was going to happen when we had the next crisis? They're going to just invest blindly and throw as much money at it. It's different. They're not taking equity stakes in banks. They're not backstopping AIG. They're not putting Fannie and Freddie conservatorship and taking every single housing loan in America under one umbrella. Once this market came back, which it came back a couple years later, these entities are producing billions in profits for the government right now. So now they're throwing everything at it, but there's not throwing it at consumers who don't have jobs, throwing it at these companies that can't pay their rent in terms of, they're going to be fine by next month. Once everything reopens, that's the plan, right? Even though they've run through all their working capital, even though there's no way they're going to see the same demand today or next month or the month after, or even 6 months from now that they saw pre-coronavirus. There's no way. Yeah, the government's there and they're backstopping everything, but I have to tell you something. All these companies that aren't paying rent, what do you think is going to happen to the REITs? What do you think is going to happen to Simon Properties? There's a reason why that stock's getting destroyed. Tanger Outlets. Today alone, The real estate index is down 7% by itself. By itself. Why? Because these companies are not getting bailouts. They're super leveraged. Maybe some of the properties I haven't looked yet, but Tandra, I mean, some of these may not have investment grade credit ratings, which is the debt that the government is investing in. Even if they do, it's not AAA, right? It's lower than that. It's getting downgraded across the board. These stocks are getting crushed. People aren't paying their rent. You're seeing like hundreds of downgrades of credit, which you're not really seeing publicly. Disney got downgraded their credit rating. GE, Ford. I mean, I'm not talking about smaller companies, major companies. What about the CLO market? I talked to you about this. Collateral loan obligations. I mean, this is a high-yielding market not getting bailed out. You pool these loans together and, got nice ratings on these things. And, you try to make them safe because there's a reason why you're pooling them together, right? Because the more you pool together, the more safe for that investment tranches. And this way you could leverage the hell out of it, right? So these guys are super leveraged. Now they're like, whoa, we got to back up. And it's disrupting this market that nobody's talking about. It's a major market, a huge market. What about Europe? Euro going to exist in a couple of years from now? I mean, this is an economy that was basically a recession pre-coronavirus. I mean, they still haven't recovered from the credit crisis. Their banks are not recapitalized. And now you shut down total economies. I mean, when we started Lombardy in Italy, I think when they announced a lockdown, it was February 22nd. It's April 1st. There's still a lockdown. Total countries on lockdown. Are you going to see that demand? I mean, there was a 35% of profits come from overseas for the S&P 500. Well, you have India completely shut down now. You have Europe completely shut down now. You have China. Who knows what's going in China? If you want to believe those numbers, I don't. Nobody in Wuhan the past week has gotten the coronavirus. We are seeing like over 150 cases of people who got it that got it again. And the symptoms aren't that bad. That's really scary to me. But just from that data alone should tell you in Wuhan, maybe you shouldn't be going back to work. And they tried it. They tried to go back to work, and they're saying a lot of stores are open. Nike announced that their stores are open. I mean, who's going to these stores, and how many people you have working in them? And they're probably operating at 20% capacity right now. And saying stores are open and we're getting 100% of what we got pre-coronavirus compared to saying they're open and we're not really getting anything, that's a big difference. I don't know if I get too excited on that news. But you're looking at Europe, it's just a complete disaster. Look at China. China's saying that most of the cases in Wuhan, and when they're not growing cases anymore, then why? It wasn't even based. If you looked at the numbers, it's statistically impossible that you could tell us whatever. It's 80,000 people got infected. Just look at the numbers of Wuhan. How many people work there? How many people work next to each other? How many people are in that economy? So if it's that good and everything's okay, then why are you canceling your conferences and major conferences, again, political conferences, things they have every year in Beijing, which they just canceled? Why? Why are you postponing that for? If things are okay. You can't really believe it's going out of China, but you're looking at the rest of the economies on lockdown right now. But forget about those problems. Forget about those. And by the way, there is a light at the end of the tunnel. I don't want you guys to just jump off a roof after you listen to this. All I'm saying is, for those of you who are fear of missing out, just understand there's just not enough information out there. Because the biggest problem of all, by far, and please, if anyone can answer this, email me, frankkurzerresearch.com. What's going to happen when we open up the markets in May? Do you know? I don't know. I have no idea. What's the plan? Is a lockdown over for every state? I find that hard to believe. Yes, it should be over for maybe New York and California. They were early on locking their economies down. Louisiana's going to be locked down. And hell, I live in Florida. People, on the border of Georgia, Florida, and the East Coast, and they're blocking New Yorkers from coming in, saying once they come in, they have to self-quarantine for 14 days. So even if you're coming in and you're visiting someone, you have to self-quarantine in a room. There's no basements in Florida. It's just, like we saw with Chris Cuomo was in his basement, who just, again, I like Chris. I think he's really good. And he has a coronavirus now. So he's reporting on CNN from that point of view. But anyone who has New York plates in Florida, people are calling the cops on. It's crazy. I have Florida plates. I've been here for 10 years. But seriously, could you answer that question for me? I have no idea. Can everyone go back to work? Well, you start up sports again. I mean, say you start up baseball and it's, August, whatever. What happens if one person gets a coronavirus? It's highly likely. And not like just eradicating this disease and it's totally gone. It's not. It's still spreading, and it's still going to spread for months. It's not going to end in April. Like, you're putting a date on when a virus is going to start spreading. I mean, how crazy is that as it is? I mean, it's just a guessing game. But seriously, if that you're going to completely shut down baseball, shut down sports again? And maybe until we have a vaccine, which isn't going to happen until, I mean, most likely next year, but hoping, with praying November, December. But a lot of these companies said they're going to start their testing in September. I mean, if you put that through the FDA process, which, again, it's going to be a rush, but you got to be careful if you're rushing something like that, because you might find out it's great for the coronavirus, but it's not great for someone who has diabetes. I don't know. You have to go through the safety process. That's what phase 1, phase 2, phase 3 are about. Phase 1, let's see if this thing works. Okay, we have a small sample size. Now the phase 2 is much, much bigger. And then phase 3 is this massive, study. The placebos, the percentage, how much is it better? This whole entire massive study, which you go through, which takes 8 years to go through for these biotech companies. You're going to rush that? I mean, just put in perspective of, if anyone thinks we're going to have a vaccine, in a couple of weeks, you might, but you'd be crazy to take it. If it's not tested, I'm not taking it. I mean, you're asking people to take a vaccine to prevent a disease that they may not get, that has no safety measures, and you don't know how it's going to impact you? Man, I don't know. Good luck. You may want to take it, not me. It's serious. That's what is the plan here? What is the plan? Do we all go back to work, and we practice social distancing? Have old people stay on lockdown? But just to magically put it, we're going to extend the lockdown, which, again, it's not a real lockdown. It's not like an Italy lockdown. I've interviewed plenty of people. Go to Curzio Research YouTube page. Interview people who are on lockdown in Italy, 2 of them. Talking to people in South Korea, talking to people in China. Again, we are not really on lockdown. It's not really a lockdown. When you can go into restaurants and they're, just pick up your takeout, that's not really a lockdown. Another problem, what are companies expected to report this year in terms of sales and earnings? They have no idea. They have no idea. So there's a reason why sell-side analysts are not updating their estimates on individual names. I mean, they don't have any data for the companies or any guidance to go by. In Apple, you're looking at Apple still has 27 buy ratings. That's what it had in February. It has the same now. And how many downgrades have we seen in large cap stocks during this 35% collapse? Again, it's now 25%. We haven't seen that many. I mean, give me a break. Now, why am I bringing this up? It's the uncertainties. I mean, you have so many uncertainties. As analysts, we want to have some kind of base. Yes, we have to forecast, and it's tough. But when companies are saying we have no idea, we don't even know if we're getting our products from the supply chains. We don't even know how many people are working in supply chains right now. Sometimes it's a lot. Sometimes it's not. Maybe someone got infected. They pulled everything for a day. You're not getting updates. We're not getting anything. And it's fun. We're not supposed to go into the market and say fear of missing out. You may be right. Maybe we find a cure for the virus in a month. I mean, the vaccines, whatever. We're talking about vaccine. Maybe we find some crazy plant that cures it. I don't know. Magic bullet. Everything is great, and the economy comes roaring back, and stocks go a lot higher. Could that happen? Yeah, maybe. Highly unlikely. But the uncertainties. I mean, just some of the ones that I mentioned there. And there's tons of risks out there that nobody is seeing right now, just like we have at every black swan event. And you can't tell me that this whole entire problem, the first time in history where countries are locking down due to pandemic, that we're going to solve this problem in 1 month. In 1 month. That is insane. Because I tell you, the markets that are going to be bailed out, we're going to see a phase 4, a phase 5, a phase 6 stimulus plan. Expect those. I mean, even when it comes to testing, to me, it's incredible that only 750,000 tests have been administered so far, been conducted. How crazy is that? How crazy is that? Yeah, we saw, what was it, Abbott Labs pass, the 5 or 10 minute test you could do from home, or less than 15 minutes, whatever it is. Let's get them out into the market right away. But still, you're not even seeing as many people tested right now. There's a reason why, Dr. Fauci, president's right-hand man, person who everybody's listening to here. I think he's fantastic. I love that he loves being in the media at all times, which is really cool. But he said, 2 days ago that 2 million people in the U.S. may die without proper measures. I mean, holy cow, you want to scare the shit out of everybody. There it is. Now you're forcing people and saying, you need to stay home. You need to stay home. We can't stay home much longer. We cannot have this economy closed for another 2-3 months. But when you're throwing out 2 million people in the U.S. may die if they're not going to stay home. I mean, the fear that you're putting in people of something when you're looking at the statistics. And again, I know everything about this disease. I understand it. My mom, 4.5 months in the hospital from a botched hernia surgery. She got diabetes and COPD. She's in the hospital right now. She was in the hospital. She just got home like 6-7 weeks ago. Thank God. But I know she's at significant risk of this. And I get it. But keeping the economy closed for several months, how can we survive this? And this is going to be incredible. So 34,000 or so that sadly passed away. And what about the oil markets? Oil down over 50% this month. How long before these companies filed bankruptcy? Is that factored in? I mean, there's millions and millions of people that work in this industry. Is this industry getting bailed out as of now? No. And guys, I'm going to give you some statistics here. Again, I like throwing numbers at you because this is the type of research that I'm doing. And I'm not really hearing this too much, but the U.S. was not in great shape in early February from an economic standpoint. We were okay. Again, low interest rates. We're better than everybody else. We have an election year coming. Talking about more tax reforms with President Trump. We weren't in great shape, though. I mean, we're seeing sales decline, and this is pre-coronavirus. I mean, hotels and motels were down over 3%. Motor vehicles were down 1%. Clothing down 1%. This is pre-coronavirus. Transportation services were down. Delivery service. Casinos were down 1.3% before this happened. Now you're seeing some of these industries travel down 70%. I mean, restaurant traffic's down 70%. Auto sales are down close to 40%. Port activity is down 30%. These numbers are happening now. Okay, the air traffic, when you include foreign, is down 90%. Are you kidding me? Who the hell can model for that? You're looking at unemployment. Is unemployment factored in? I don't know. There's 30 million small businesses that employ 60 million people. Most of these places are shut down. They're offering takeout. And you look at 30, 40 million people unemployed is not just possible, but very likely, which will put us at a 20, 25% unemployment rate. I don't know if that's factored in. But the fact that we don't know that it could be 40, 45 million, even more, that you're promoting companies that have employees that make less than 45 grand to lay them off for 4 months because the government's going to cover the costs. And you can have these people work from home, rehire them 4 months from now, and then give them a small bonus. I'm not doing that. But there's a lot of companies that are going to do that. They're going to use the government and their money to help their businesses and help businesses that are doing okay that really don't need it. That's the nature of these bailouts. That's the fallout. I mean, it's 30% of the Russell 2000 has zero profits. 30% were reporting zero profits. They never reported profits. This was pre-coronavirus. Most of these names are leveraged. They have high-yielding debt, which is not being backstopped. Is that factored in? I don't know. Small business loans, is that going to cover all this? All the people getting laid off? Or is it going to cover it? Maybe not, but we're probably going to announce another stimulus plan. So I'm throwing these things at you. Okay, I'm not trying to scare the hell out of you. What I'm trying to tell you is the uncertainty is unbelievable. There's nothing out there. There's not even a plan that we have. We don't even know how long we're going to be on lockdown. Companies don't know what the profits, revenues are going to generate. And for people to just say, second half of the year is going to be great, come on. How do you determine that? And what, you just woke up and had a good dream? Because it's not based on the data. This is why I remain cautious, why I'm telling you to be patient. And it's just a month. It's just a month. It's not like, oh, you're getting that itch to trade. If you are, then trade a little bit. Have some fun in the markets. Knock yourself out. Instead of being like, Bank of America, who just put Apple on their best ideas list. Just today. Apple, who completely removed their guidance for this year. They have no idea what they're going to earn. But B of A put them on their best ideas list. Apple, who is really a hardware company that had trouble producing tens of millions of phones when China was on lockdown for 10 weeks. And now China's open. Everything's fine according to China, which it's not. But the rest of the world's on lockdown. And they're going to stay on lockdown for at least another 30 days, likely more closer to 60. How many people are going to be buying iPhones? But BofA just put Apple on their best ideas list. And Apple's a company that doesn't know if its new iPhone will get launched this year. They already said they're pushing it out. It's supposed to get launched every September. And here's a company that didn't tell us if people are canceling orders for the 11 because you weren't able to produce them because the 12 is going to come out. And that's big day. That's very important to understand. All these uncertainties, yet Bank of America, Apple's on our best ideas list, even though we have no clue what the hell's going on. That's crazy. As an analyst, that's crazy. If you're an investor and you believe that, that's fine. Maybe you have a feeling. Maybe you think, hey, look at that cash balance, $100 billion. They're going to be in much better shape. They're not going to suspend their dividend. Things are going to get, but fine. But you don't have the data. I mean, that's why we pay people. That's why you pay me. That's why I have subscribers here to try to tell you this stuff based on the research and my experience. There's no research here. And Bank of America is saying, hey, Apple's on our best ideas list. Remember, it's in their best interest to make sure all their clients are invested. If they're not, they don't have to pay fees on that. And these guys are bleeding cash. But on their best ideas list, I mean, I won't curse, but come on. So these are the uncertainties. Will it open up the door to great opportunities? Yes, it will. It might take 6 months. It might take a year and a half. Maybe we get more clarity. Yeah, it's going to open up. Yes, you're going to have an amazing buying opportunity, but don't jump in ahead of all this. I mean, there's too much uncertainty out there to say that we fix this problem in 1 month, that we've never had before. There's no playbook for. We don't know what we're doing here, which is fine. I mean, you can point fingers as much as you want, no matter who's in office or whatever. Again, this is all new. I mean, people getting pissed off that we don't have more masks and more ventilators in stock. Are you kidding me? I mean, so for 20 years, we used 50,000 ventilators. We're supposed to just magically produce like 6 million of them in the whole, because we might have a problem one day. It doesn't work like that. Businesses don't work like that. Okay, you can point the figures as much as you want, but this is daily, day by day, we go by and try to figure this out. And really, we don't have a plan in place. But once it does, once we go back to work, once people look at this more like the flu and not a plague that you're going to die immediately if you get it, which is what a lot of people believe right now, because we're scaring the hell out of them. I mean, people don't get nervous around the flu. Yes, I get pissed if someone has the flu in one of my kids' classes and they, let them go to school. I get pissed off. I'm like, come on, keep them home. But that's what we should do. Keep people home with the coronavirus. Yes, it spreads a lot faster. Again, I know the statistics, but let's get a plan in place. And once we see more certainty, then I'll start picking away. And I am going to start picking away. There's companies out there that make sense, that you're going to see their profits. You're going to see their earnings. Not many, but there's a few. Doing a lot of research and running screens for my subscribers. And I present them with these screens. But just be careful out there. It's not a rush. This is your money. This isn't a game. This isn't like I got the itch to trade, fear of missing out. I mean, be careful. I mean, the fear should be of you losing your job. I mean, there's a lot of people that are going to lose their job. There's a lot of people that can't afford things. A lot of businesses have, most businesses have a 3-month supply of cash to withstand something like this. And that's based on models of the revenue declining 25, 30%, not 100%, 90%. Just be careful out there, guys. Trust me. I'm doing a lot of research for you. I'm going to let you know when I get back in, start picking away. But for now, there's still too much risk. And I'd be very, very, very surprised if we do not retest those lows, just like we did every other time, because there's just so much uncertainty out there. There's problems out there we haven't identified. Again, real estate getting crushed today because no one's paying their rent. Everyone's saying, oh, well, the companies, Cheesecake Factories and the Subways, they're going to be okay. Their employees are going to be okay. It filters down. What about the REITs? What about their employees? Now they're going to have to lay off people. They're leveraged. Their bonds are going to get downgraded. They can't get any capital from the government. I mean, it's the whole infrastructure that you have to support here. It can't be certain businesses and just travel. It's a whole infrastructure. And that's what we're going to see phase 4, phase 5, phase 6 come out in the stimulus. And we're probably going to see that through this month. Anyway, just doing a lot of work for you. I want to present some of those ideas for all of you who think, the fear of missing out and you want to jump back in. I just explained at least 10 uncertainties that are pretty crazy, that scared me, that, again, is a factor in. I'm not too sure down 25%, but we're likely going to retest the lows here. So be very, very, very careful. Now, I have a great interview today. It's with Ginny at Terranova, who's the editor of Curzon Research Money Flow Trader newsletter. It's a newsletter that uses safe option strategy to bet against stocks and sectors. Ginny has been absolutely killing it. I mean, just locking in huge gains, tons of triple-digit winners. Again, the market's in the favor, but even pre-cash, she was doing incredible. She's taking over this product. We're seeing a lot of demand for this newsletter right now because I've been aggressively marketing it. Why am I aggressively marketing? Because I want you to be in the right areas. I want you to learn how to hedge yourself. I want you to be able to make money when stocks go down. This is a market that's going to be like this for a very long time. For a very long time. There's going to be pockets that do good and other pockets that do bad. And this is a newsletter that helps you out. Like, I'm not trying to sell a growth newsletter to you right now. I'm not trying to sell a crypto newsletter to you right now. I mean, this is something that's going to help you. And, we've been sending out special offers on this product, and a lot of people are coming in and asking me questions, and, we're answering. It might not be right for everyone, but again, it's conservative option strategies. Ginny is going to break this down. She's going to talk about, some of the positions, the past positions that did well. She's also going to talk about, what she thinks about the current markets, and it's not all bearish. I mean, this is a newsletter that doesn't only focus on bearish. I never want to handcuff anyone, analyst that I bring on. So if she sees opportunities from, some of her good sources on the long side, she's going to put them in a newsletter. So, it has that focus of options and, betting against stocks and sectors, but it's not 100% focused where she can't go long here or buy calls and things like that for certain stocks. But she breaks that all down the interview. It's going to be really, really fantastic. And seriously, she's been doing an unbelievable job. What an amazing hire. And we're very lucky to have her. But you're going to hear from her directly in a few minutes. And in my educational segment, I'm going to share a strategy with you that can make you a lot of money. That's likely going to make you a lot of money. It's one that you're not going to hear anyplace else. It's one that you need to do now because earnings season is coming. A lot of companies are going to start reporting this month, later this month. Something that never used before because we could use it in these extreme times. And to me, it's like a layup. It's like a layup. So I'm going to give you lots of ideas how to play this trend, how to make money off it. Again, it's going to be fantastic. Believe me, I don't want to build it up too much, but just trust me, it's going to be a fantastic educational segment where I'm going to teach you, how you can stay ahead of the sell side analysts because a lot of them aren't reporting anything right now. I'm going to show you exactly what I mean and showcase one technology company that everyone loves that I think is an incredible short right now. So that's coming up in a little while. But first, let's get to my interview with the one and only Ginny at Terranova. Ginny at Terranova, thanks so much for joining us again on Wall Street Unplugged.
Hi, glad to be here.
Well, let's start with the markets because when we were speaking in mid-February, I remember you saying, investors finally have a legit reason to sell stocks. Now the market is down around 25% or so. It was down 35% and came back. What are your thoughts here? I mean, nobody cares about the past anymore, right? They want to know when to get in. Should they be buying stocks? I mean, do you see more pain ahead? Is the pain limited to some sectors and stocks? Or maybe are you seeing names to buy? But there's so much going on. I'm hearing so much information on TV. Let's get the scoop. What do you think? What are you doing with your portfolio and in the markets?
Yes, I agree. There was back in February, the market did have a legitimate reason to sell, and unfortunately, the reason was much more than just a random reason, and it did accelerate. And again, unfortunately, they have even more reasons to sell now than they did back in February. So I'm not sure that it's completely over. And again, we have a few factors to watch. I think I'll go over that in a minute. But I just wanted to say that there is a positive factor that so much liquidity is being thrown. Pretty much no holding back in terms of for the stimulus and the Fed. So we may not see as much of a sell-off as we did this past quarter. But the market still needs to find its footings, and it will be looking for a few very concrete and legitimate reasons to, stop selling and finally get some real buying going on, not just short covering. I think they need to see stimulus actually materialize, and maybe in the next wave of stimulus they need to see liquidity, and the Fed has been good in providing liquidity, but they need to keep doing this, and they need to see the slowdown in the rate of spread and actually the legitimate reasons to believe that it's not going to return in the near term, at least. And maybe not all three must be 100% there, not all three factors, but they should be there until we see all these powers coming together, the government, the Fed, and the health community, we will probably be in a precarious situation.
Now, Ginny, you said something that's really important here, because you said you used the words concrete and you used evidence, and you said evidence. So you're very familiar with the sell side analysts. You're very familiar with again, the Goldman Sachs, the research behind JP Morgan's, the Morgan Stanley's, right? Those are the sell side analysts. You're very familiar with that part of it, of the business. What I'm seeing on this end is that they haven't updated a lot of their numbers, especially on particular stocks. And why is that? Because the companies aren't giving them any information because they don't know. They completely remove guidance.
Right.
When do you see this? Because on the health side, look, we're all looking for evidence that we're going to see a slowdown. We get it. All right. We're going to see slowdown in cases, and hopefully New York gets better first, and California, and we know it's spreading in Louisiana. I mean, we're watching TV all the time. Most people, everybody's home. What are some of the things that you said, like from a liquidity front? Because what I'm worried about here is the things I can't see. And that's usually what happens in black swan events, where you can't tell me that this problem has been solved in 1 month, throwing $2 trillion on the fiscal end, backstopping these other industries. I mean, we're doing this interview on Wednesday. We're seeing real estate fall by 7%, probably because that's not being backstopped, and everyone's saying that they can't pay their rent. I mean, so what is, you mentioned some of the things that you have to see concrete wise, but even from the earnings side, are you seeing names that, we do have the Walmarts, maybe the Costco's, but most of these companies, as you know, because you follow this industry, they're not putting out any reports. Companies are not putting out guidance. And to me, it's pretty scary that people just want to jump in blindly without into companies that aren't reporting anything.
Yeah, they actually, in fact, they're pulling their guidance. And let's say Domino's Pizza today, they pulled their guidance despite the relatively benign environment for the takeout. I mean, they kind of benefited from the need to not to go into the restaurant but to take out the food, and they pulled the guidance. Why? Because they don't know, and they're in fact, even if they have some inclination, understanding of what's going on, they're not going to say it out loud because that may change, and they're responsible for every word they utter. So I think what will happen, again, from the concrete point of view, when companies start giving guidance, as bad as it is, I would read it as a positive factor.
Yeah, that is interesting, because we did see Micron offer a little bit of guidance, which I think they're pretty crazy, because that stock went up and pushed a lot of data center stocks up. But they also, you got to listen to the whole thing or read the whole transcript of the conference call, because they said they are having trouble from their suppliers getting deliveries. So if they don't get deliveries, they can't sell their products. It's, but it's just a good example of a company that said, hey, here's what we expect, here's the impact, and that stock has outperformed the market. But when I look at your newsletter, right, and say, you're editor of Money Flow Trader, you've done incredibly well. You have market conditions behind you, but even before that, since you've taken over, this product, what you do is use conservative option strategy to bet against stocks and sectors. I know most people out there, most investors, they don't understand options. Some of them are scared of them. They think they could lose everything. It's, again, there's just that misconception out there that if you don't understand it, you'll never do it. But how can you explain some of the things you're doing? Because you do tailor to mom and pop investors, and it is a conservative option strategy where you're only going to lose as much money as you put in. Again, this is one of your strategies, but it's not like you're going short and you have unlimited risk, right? Stock keep going higher and higher, you get blown out. Explain maybe, some of these strategies that you're using, because you are starting to get lots of subscribers to your newsletter. You are performing good, and I see these market conditions staying around much, 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 much longer than everybody else. Not to the point where the market's going to completely crash and stay there for 3 years, but you're going to see sectors. I mean, this is consumer behavior that's being impacted, where it's travel industry. There's going to be so many opportunities where people have to learn how to hedge their portfolios, right? So why don't you go over some of those maybe strategies that you use to get everybody, in tune with it?
Well, thanks for the kind words. I'm doing my best, and I think the methods that I use, they work in pretty much any environment. What I start with before I go out with a recommendation, I look at the macro picture, and the macro picture is easier in the sense to assess, because it's really what we all live in, and it's the news, and it's the trend that are again easier to see if you look from again the high up, and then once you look at the macro picture, you're trying to determine, as you just said, which sectors, industries, and maybe later on companies will benefit or lose in this changing macro environment. This method applies even if a sell side analysts stay quiet, because let's say the GDP will decline. It will decline by double digits. Nobody's questioning this, and the only difference is by how much. But it's not going to be declining uniformly. So we're going to see some pockets of relatively steady business and a lot of businesses that are going to decline. But nothing's really changed in my analysis compared to what I did, let's say in October, November, December, because I looked at the macro picture. I looked at sectors that are not going to do well, and then I drilled down to specific companies. And the method that I use to capitalize on this temporary or long-term dislocations and discrepancies is to trade options. And options are not, as you said, they're not that scary as many people think. You need to know what you're doing, and I'll help you with that as much as I can. And you need to know your limits, which is relatively easy with options, because as long as you understand that you cannot lose more than you invest, you just set the amount that you need to can afford to lose, and then you place a few trades. The payout can be very significant. It's not going to be at 5-10% most of the time. It's more often than not, if you do it right, it should be well into double digits, often in triple digits. And yes, you can lose 100% of your investment. Absolutely. But you limit your risk by not putting your grocery money or your rent money into this.
Now, you brought up a lot of good points there, because it's not just with the option strategy that you're using. It's also in your newsletter. You'll see a few, long positions. You might see a little bit of call buying. I mean, you throw a lot of things in there for the. I mean, it's mostly as a focus where you're betting against stocks, but you have other things too, right? I mean, throughout the newsletter where, if you do see ideas because you're so in tune with the market, that you can go long at or buy calls, right?
Right, absolutely. Again, this market wasn't very receptive to calls over the past 3 months, quarter. But over the in January, we closed a call trade. It wasn't, the market was slowing down. It wasn't like the biggest rally ever. We made money on the call trade. And yes, you can buy stocks outright if you think that their timeline is uncertain, because options have expiration, so you need to be mindful of that. You can buy stocks outright if, let's say, if it's a small or micro cap, and options either don't trade or not liquid enough. And this is an investment service where I can pretty much go anywhere the market tells me to. And again, thanks for the way it's set up. I think we can do good things here.
Yeah, and I always, being in this industry for so long, I realized it because this is what happened to me, guys. Really quick story. When I was in charge of a Stocks Under 10 newsletter, and it was one of the biggest newsletters at the street.com at the time. And it was just stocks under 10. I was limited to stocks under 10. I saw amazing ideas, small cap ideas, but I had to make sure the price was under 10. I was limited. And then we tried to get into, even when I went to Stansberry, it was, small stock specialist and companies under $1 billion. And again, I mean, you're someone who's in tune with the market and was trained to know every sector, every stock, and just, totally been in this 25 years. So many ideas I couldn't share. So now taking it over to this, I never want to put handcuffs on great analysts where, I want them to, the newsletter has a focus, and yes, that's working. But also, if you're seeing different ideas, you should be, and I said it to all my analysts, you should be able to go where you want a little bit, where you have the theme of the newsletter. But that was always important to me, and I'm glad, you brought that up because, this is a short news. If you see a great idea, you talk to your contacts. I mean, not to share that idea with subscribers simply because, the newsletters is strictly options or something like that. Just to me, that doesn't make sense. You're not doing what's in the best interest of the clients, I think, and subscribers. So I'm glad you brought that up. Now, I'm going to bring up something else because you have been an income analyst for a very, very long time. It's something I know that you're passionate about. In fact, we're launching a new product temporarily called Income Intelligence. We have beta versions going out for our Curzio One members, and we're going to try to launch this over the next few weeks or so. Talk about, for me as a publisher, right? Income newsletters usually don't do that good. But when I spoke to you, and I always wanted an income newsletter like this, because when you hear income newsletters, what do you hear all the time? Okay, buy good quality names that pay above average dividends, right? What's different from your methodology that's going to change this, where people aren't going to feel like they're getting the normal income newsletter where, okay, you're going to tell me to buy J&J, like I don't know that. What are some of the things that you're doing in this newsletter that are going to be different, that are going to just some strategies in terms of what's going to be different? It's not going to be the status quo for this newsletter, and express that to everybody out there.
Well, let me start with a simple statement that everything is different. So my methods are applicable to most markets, or if not any market. But today's market is very different from what it was a few months ago, because income stocks are becoming rare. Income stocks are becoming more concentrated into a few areas of the market, and many income stocks that traditionally have been reliable payers, they're either drastically decline in value, which means that will probably near term will start cutting dividends, like mortgage REITs, for instance, or some other REITs. Retail investment trust, as you know, is a traditional income stock, income group for most, if not every, income investor to get their, reliable, steady income, and have been doing this over the years. Again, dangerous group. Really need to be either extremely selective and avoid some specific areas and names. Banks are not, I don't know whether they're going to be raising their dividends anytime soon. Cruise lines used to be a dividend payer. What do you think happens now? Yeah. So the dividend investment is really, really different. What I think will happen now is that they're investing in income stocks will need to be much more founded in reality. You don't just buy for the yield. And I would never tell a person or subscriber or any of my friends to buy for the yield. But it's true today more than it was before. You have to be in the very good research-based portfolio, and then you have a chance for not only for having income on it, but also for growing income. And to create that, combination of stocks, I actually compare them to each other, not just to the market and to their industries. I look at portfolios. I want to see how stocks move together over time, and to correlate the past returns and correlate the expectations, you can actually create a safer portfolio.
And you brought up something good there, Ginny, too, because a lot of people, when they look at, where PE is or the forward PE, which again, this is different times. Nobody knows what the forward PE is because companies aren't telling you what they're going to, whatever, they pull their guidance. But when you're looking at a company that's trading at 25 times forward earnings and say pays a 2% yield, people may look at it and say that's really expensive because the market was trading at whatever, 17, 18 times forward earnings. However, but you just mentioned something important. Maybe you could just, go into that a little bit more. That stock may be expensive for the market, but maybe it's a cloud company, maybe it's a growth company and deserves that multiple. And also, even though it's expensive relative to the rest of the market, which isn't growing as fast, but when you compare it to individual companies within its sector, it may be the cheapest among those and one of the fastest growing, right?
Right. It does happen, not too often, but again, that's why you need to be on lookout for pockets of value. And what you really need as an income investor today, every day, in the past and in the future, you will need income growth. And as you mentioned, some tech stocks don't yield 2%, and they fall off the radar of many income investors. It's completely wrong. These companies will be able to maintain and increase their dividend. You need to be able to say 1% today, 1% yield today is going to be 2% yield tomorrow, and the stock price is likely to go up. Why not buy it today? Even though that yield might not be as much as you were really looking for. It's what you look for in relative to the business, in relative to the sector, and in combination of future expectation.
Yeah, definitely makes sense. Definitely makes sense. So I want to, before we go any further, too, I know that people love this. They love ideas. Of course, we always make sure we don't give away stocks that are in our newsletters that people pay for. What are some individual ideas? Because you hinted that, hey, we could see more downside ahead, but there are little pockets here and there that seems like you got excited about. Maybe is there a way to play this where you see some plays that are going to continue to see more downside here, even though they are down a lot, and also are seeing any opportunities pop up that you could see these earnings, you could see what's going on. They're in great markets right now where they're not too infected from the being impacted or affected from the coronavirus.
Mm-hmm, mm-hmm. Okay, I think the difficult sectors are the obvious ones, but it doesn't mean that doesn't mean it is any less true. So I'll just have to say, because you need to continuously stay away from travel stocks, at least in near term, from cruise lines for near to medium term, even if they survive. Airlines are going to be very difficult, although they are backstopped by the U.S. government. So again, something to keep on your radar. Restaurant stocks are going to have a hell of a time coming back, except for the largest and the strongest. So some areas that will continue to be under pressure, and I'm just scratching the surface here, but most of these are true. People know that it is true, and doesn't mean it any less true. Similar situation is for upside. Even though you need to drill down every single company that you like, there are still sectors in which you have to concentrate your efforts. And today it's tech, it's consumer staples, and it's the best of healthcare. For me, these are the three sectors that I would look at first. And of course, there are more, but again, I don't want to push any ideas before they're fully developed.
Yeah, I know. I got to get a lot of research behind these ideas, and I guess let's finish the interview this way, because you're in Staten Island, right? So you're under basically lockdown. Talk about that experience, because you see it better than most New Yorkers. You see in the restaurants. I mean, it also helps out in your analysis where someone in Kansas might not be seeing it, or someone else in again, that's an extreme example and totally opposite, but being in that market and seeing places close that were actually booming a month and a half ago. I mean, talk about that experience, because, a lot of people are from New York. Yes, I have a lot of lists from New York, but, most of the base is from outside New York, and they really don't understand what a lockdown actually is, because not every state is on complete lockdown.
Mm-hmm. The buses are empty. Subways are empty. And not that I saw it with my own eyes, because I'm locked in my house and I don't really want to venture outside, just because I was asked not to. And it's a reasonable thing to do. But everything that from my friends, from my colleagues, from my contacts, and from pictures that I see, it's eerie, it's scary. and it's really the complete shutdown of the city on near complete shutdown, because we have garbage pickup, and the public transportation is running, but it's not really the New York, the feel and the sense of New York. Subway, I don't know if you can ever, even in the at midnight hour, you could see subway stations that empty, or subway trains without any people. But the public transportation is running because it's needed for people who must go out. Streets are empty. I haven't seen any traffic in the last 2 to 3 weeks, which is
amazing.
quite unusual for New York. And we'll just need to understand what we can do on our part to bring the economy back faster. And our part is to not to spread the thing around.
No, I know. It's tough because it's just amazing how some states are on lockdown, some states aren't. We're not really on lockdown in Florida too much. That's why you saw everybody on the beaches, and then you see places like New York, California, that are on serious lockdown. But it just, I mean, from your common sense point of view, because we're numbers, we do the data, we do all this, all the research. But from the common sense point of view, we're planning on opening up our economy, if you would say. I mean, this is right now, is the plan is after April.
Mm-hmm.
I mean, the common sense from even from what you're seeing, I mean, it's the problem's not going to be solved, right? I mean, people are still going to have the virus. It's still going to be spreading. Are you going to open up the economy? Are you going to put? It just seems like, for me, I'm trying to get something that makes sense in place. Like either lock down everybody for 3 months, this way we don't have it, or let people go back to work and put, everyone distancing 6 feet away, old people at home. We get it. We know the risks and everything, but just, the plan right now just doesn't make sense to me. I wanted to get your thoughts on that, maybe for the final thing, because again, you are in New York, you are on lockdown, but it just seems to me like the plan in place just doesn't make sense. I mean, this isn't going to magically go away next month and everyone's going to just run and go back to work.
Honestly, I don't think we really have a plan in place. I think a plan not to be outside as much as you can is more or less working. It's I don't think you can restart economy and then pause it again if this gets out of control. And again, I can't predict what will happen, but I think that sometimes you just need to go see what the numbers are. In this case, it's the number of tests and the hospitalization. And maybe, just maybe, if this is slowed and being, you can see that it's not spreading as much as it did, you start letting people out. I think the very important part in this might be if we do develop a cure, which I know many companies are working on, and it will be faster than the vaccinations, because the vaccine, nobody's promising the vaccine before 2021. And they're testing people for antibodies. Many people are immune, but we don't have enough capacity, or any, I don't think, to tell who are immune and who can actually go out and run this economy. We can definitely restart it when we know that it's at least relatively safe, and we're not going to roll all the openness back again. I think it's a very fluid situation. I agree with you. It's not sustainable the way it is. But what's the alternative?
Yep, exactly. And that's the thing. You don't want to criticize everything without having another option, but it just seems like the two options is letting people go back to work, or, and again, keeping your social distancing and making sure people are safe, or you lock down the economy for a lot longer than April, because this is still going to be spreading. But I'm with you. Like, as an analyst, it was just nice to see certainty, even if it's bad news, as long as you have something to base it on. But right now, I just feel like we're up in the air in that, which it makes me really nervous.
I agree with that, but I also believe in science, and I think that any indication that we have tests for immunity will be great news for this economy.
Yeah, absolutely. That would be really, really huge. So hopefully get that sooner rather than later. But
Yep.
Ginny, I just want to say, listen, I'm proud to have you on our team. The gains that you showed our subscribers, courtesy of research, especially during this downturn when people were, losing a lot of money. You talk about, gains of 5x, 10, I mean, huge, huge gains in some of these positions. And I just, for me, I'm trying to put the right newsletter in front of people where they're learning how to hedge, they're learning how to make money in down markets, and just, and also be able to protect themselves. But I appreciate all the work you're doing. And I know everyone's looking forward to the launch of your income newsletter. So I just want to say thanks.
Thank you very much. It's my pleasure. And I also definitely look forward to the income newsletter. I think that would be very important.
Okay, great. So, all right. So I'll talk to you soon, like we do. We always talk. And thanks so much for coming on. I really appreciate it.
Thank you.
All right, great stuff from Ginny. I love her. I mean, she comes on. She's always like, "All right, I'm not, not too sure if I want to come on." I mean, she has a heavy accent and things like that. So, she's always like worried about doing media, and I love that because she really cares. She is an incredible analyst. She's not someone that's going to go out and say, "Hey, I'm great. This is what I do." But just working side by side with her, just seeing what she's done for this product beforehand, the amount of alerts she sends out, the educational component, which is what financial newsletters are all about, right? I mean, you're going to have your winners, you're going to have some losers. You have to have more winners than losers, or find a new job. But the most important point of this, and the reason why I think being in this industry 25 years, to describe it, is you want to educate these people. You want to tell them why you're buying these stocks. What are you doing? A simple form of like Ginny is doing with option strategies of why we're doing this, how much you could lose. It's, if you put $1,000 into a trade, you could lose $1,000. So she's going to make sure that, if that risk is 100%, you want to make sure that those gains are 3, 4, 500%, which she has been doing. I mean, some of the gains in the newsletter, again, this is past. It's not an indication of future performance, but just to show you in a market that's crashing, and a market's going to have so much uncertainty where you're going to see a lot of stocks just, on the earnings front, some are going to be more impacted than others on the coronavirus that we don't even know about yet. But I mean, it was a Starbucks position. She closed out one half for 195% gains, and then the second for 508% gains. Tiva, 125% gains in 2 months. Bed Bath & Beyond, she closed that one early, but there's some she got into November before this stuff happened, which she was doing well in this position, 150%. The semiconductor index, when she bought puts against 137%. I mean, these are amazing gains, but it's not something that you take your whole portfolio and go into it here. Okay, that's not what you do. You have to be very, very careful. You have to understand your risk, but the reward is incredible. And it's a way to hedge your portfolios. It's a way to hedge if, hey, I got some really long positions, I'm not out of the market, but in case the market comes down, short term, this is a way that you can make money while maybe some of your long positions are going to go down in the short term, but be great 2-3 years from now. So this is all explained in detail, which she does a fantastic job. So Money Flow Trader, we sell this product for $3,000 a year. Okay, I'm probably going to raise that price. It's a perfect newsletter for this environment, and it's going to be for the next few years. But we are selling it for $1,500 annually. So we lowered that price. Again, we understand the situation. We understand, a lot of you have done well and probably in cash right now, but there's others new subscribers that are coming in, and this price point might not be for you, and that's fine. We have lower price products, but not just for the $1,500. We're also going to give away her Income Intelligent product for free if you sign up for that, which I think is an unbelievable deal. So, I mean, we can't do better than that. We plan to launch that in a few weeks, but we're sending out beta issues every month to get feedback from our best subscribers, and you'll have access to those beta issues right away. So, which is a good deal. So it's really great stuff. You're not going to see that offer on our website, though. You're only going to see it if you're on an email list. If you're not on an email list, you can go to our website at curseyresearch.com and just put your email there. Again, we're not going to blast you with 500 emails a day, just when we have good offers and when we publish great material and stuff like that. But again, we're not putting on our website because we just we don't want this price to get out where anyone to outside the Cursor Research umbrella to get this price, because this is a great newsletter that we could sell for a lot more. But again, we want to do the right thing for our subscribers because people are interested. They want to know what to invest in. This is it. This is a product that makes sense in this environment. And she's even going to have long positions in there. So, perfectly set up for this. This is the reason why I created this product. Very happy with the work that Ginny is doing. And again, someone that's brilliant. You're going to know that. Just go to the archives and once you start following, you're going to see how brilliant she is and how lucky we are to have her on staff. So again, go to our mailing list. Just go to curseyresearch.com and you will get that offer. Don't forward it to anybody. It's just, for people under the Cursor Research umbrella. Now, let's get to my educational segment. So I just did a live video yesterday about my favorite tech stock to short, and it was AMD. So when I look at AMD, this is a company that outperformed the market. It's doing fantastic. Micron came out and said data centers are really, really strong and things are awesome. I mentioned that in our interview with Ginny. And AMD, who's in this industry, just took off. I mean, it was pushing towards $50 a share, which is kind of close to its highs. I mean, it was 57 was high. It was only there for like a week or two. But, I think it only traded over 50 for like a month or two. It's all-time highs. Now, when I look at Goldman, who covers them, so they're the sell-side analysts, along with however many, if it's 15 or 20 that cover AMD, they haven't updated their estimates. For example, when Goldman was talking about this crisis at the beginning, and this was late February, they said it's a V-shaped recovery, we're going to be fine, GDP is going to go down a little bit, not in a recession. Then as the week went by, they started, doing a 180. And they were saying, okay, we may go into a recession, the market come down, but we're going to bounce back really quick in the second half. So again, they didn't update AMD. Goldman's updating their market forecast. Yesterday, again, I get all these from every single sell-side research firm, okay, looking at all their forecasts, what they're updating, what they're doing right now. Goldman just came out with their most updated forecast yesterday. They're expecting real GDP growth of -9% in Q1 and -34% in Q2, okay? They were expecting like a rebound in Q2 3 weeks ago. I'm not picking on them. I'm getting to the point here, okay? They see the unemployment rate rising to 15% by mid-year. Again, I think a lot of this is conservative. Maybe that 34% down in Q2 on real GDP. I mean, that's one of the lowest numbers I've seen. But they say, however, we upgrade our expectations for the recovery after mid-year with a 19% quarter-over-quarter annualized GDP gain in Q3, which is a very big number versus 12% previously. So again, they're still predicting like they keep pushing out. That's what these analysts keep doing. They keep pushing out their estimates and saying, okay, it's going to be 1 month. No, it's going to be 2 months. It's going to be 4 months. It's going to be 2 quarters. Second half is going to, and they keep pushing out. Now you're going to see them push out to 2021 because there's so much uncertainty. If you're looking at their employment rate, they're saying now it's going to be 14% unemployment. So, they're looking at all this data, but they haven't updated their estimates on AMD. Which is, very, very surprising because they were extremely, extremely positive on this stock. They believe that this stock was going to continue. I mean, they were expecting record margins. This is like a month ago, I think was one of the last reports. Record margins, record revenue, record earnings. And they have AMD trading at 40 times forward earnings, right? So, their advice is still, if you're reading their advice on AMD, they're like, things are pretty good. Things are okay. Not necessarily the case. I mean, look at their market forecast change. So where am I getting to here? What's the strategy? The fact that these guys are so behind the curve, right? You're seeing estimates, they have yet to come down for a lot of these stocks. I mean, do you really think AMD and trading does it deserve to be trading at 40 times forward earnings? Does any company deserve to be trading at that? And you could say AMD released all these great products. They're taking market share from Intel. I know. I go to Consumer Electronics Show every year. I was there when they announced it. Believe me, I know. I know they're going into more software. I know they're into AI. I know the gaming community. I see it. I see the demand. I get it. The data centers Micron said is pretty good. But let me tell you something. This company's not going to report record revenues, and you think they're going to report record margins because, I don't know, are they magically going to have pricing power in an environment where there's little demand? Where your competitors are NVIDIA and Intel? Really? You're going to be able to command much higher prices? I mean, 30% of your revenue comes from that data center market. Yeah, it looks pretty good right now. More people are going online. I get it. But at the end of the day, AMD is a hardware company. It's a hardware company that has supplies in their supply chain and companies that they use in China, Beijing, Malaysia, Taiwan. And you look at their list of suppliers in these places where there's been disruptions in supply. I mean, you're pricing this for perfection, AMD. It's priced for perfection. And it's crazy because is that really going to happen when everything's shut down? Are you going to see that much demand? Yeah, more people are buying laptops. And you're saying, well, the gaming community, these people are going to pay tons of money for these graphic card processors when the parents are the ones that buy a lot of these computers and they're worried about being laid off right now? I mean, you're assuming that everything's going to be absolutely perfect with this thing pushing up to 50. But there's a lot of hardware companies. These are a lot different than the Microsoft and the Oracles and the Adobes, the software companies. I mean, the Apples, the semiconductors guys, the hardware players. And some of these companies are bouncing back. And I've seen even Skyworks say, hey, we're not going to see that much of an impact. Are you out of your mind? And supply chains have been disrupted everywhere. Now that they're coming back online, maybe just China, demand has been significantly disrupted given the shutdown of India now, the shutdown of Europe, the total lockdown, the lockdown of the U.S., where it's going to get worse before it gets better. I mean, think about chip companies. One of the biggest growth markets for them is the auto industry, right? All the bells and whistles, you see everything. I mean, that was a booming industry, not so much where auto sales were a booming industry, but all the parts that go into this. And chip makers are making a fortune on this. Booming market. Auto companies are completely shut down. Supply chains are shut down. They're not selling cars. What about IoT, another great market for them? People buying appliances like crazy when they're worried about their jobs and not working. The lighting, the smart home devices. I mean, few people are spending right now. It's a dangerous market. You're seeing chip companies surge to where they're only down slightly from their 50-day moving averages. To me, that's crazy. That's insane. These are hardware companies. They have to make these products. Then they got to sell them to companies where a lot of these companies some of them aren't even open. I mean, demand's going to fall off, even if it falls off a little bit when you're looking at a company like AMD trading at 40 times forward earnings. So here's what I'm saying. It's not as easy to find out, what the analyst estimates are. You can go on Google and you can figure out a little bit, and there's different places. I always said briefing.com is a good site. Again, they don't pay me or anything, but you could punch up AMD. They'll tell you when they're reporting earnings. They'll tell you the quarterly earnings, the annual earnings are expected and things like that. But you'll see that they haven't come down that much. And if you're looking at earnings in general for all the companies, for the S&P 500, I think they've only come down about 10, 12% right now. 10, 12%? Really? Are you kidding me? That's all it's come down? I mean, that's pretty crazy. Because I'm seeing it come down at least 25% to 30%, which means the PE ratio that everybody believes on these companies, and it's not even close. If you think, wow, we're trading at 19 times forward earnings, we're trading more like 22, 23, 24 times forward earnings because these earnings are going to drop tremendously. And they haven't been updated by the sell-side analysts. So it's going to give you an opportunity that they're not updating these numbers, that expectations are really freaking high going into next earnings season. So I will look at all the companies, especially hardware companies on a tech side, because tech has been good. But look at companies that have outperformed the market in March. See where they are. Do they deserve that premium? Yeah, Walmart does. Amazon does. Yeah. But do chip makers? I don't know. Hardware companies, supply disruptions, they haven't really reported anything. But for AMD to come out and say, hey, we're just seeing a minor disruption, but second half's going to be great. That's all they said. And yet Micron report great on data centers, and now the stock shot up tremendously. I'm like, whoa, at 40 times forward earnings in a market where almost every country is closed. Are you kidding me? So you're going to find opportunities, especially through money flow traded, that you could short. And also, on the long side, you're going to find opportunities as well. But you have to wait until these, not wait, but I would start shorting some of these companies that have outperformed, that have operations. You can go on their websites and see where the operations are. If they have supply chain, outside the U.S. or whatever, especially in Asia, it's been disrupted. But these guys have not updated their estimates or anything since a couple months ago, pre-coronavirus. So they really, the next quarter is going to be insane when we're listening to what these companies are saying, because they're not going to have any guidance. And I mean, there's no one's going to say, very few people are going to say business has never been this great. We have companies that provide internet infrastructure, and again, more people at home, maybe laptops, gaming. I get it. But 85% of the industries in the world here, listen to these conference calls. They're going to be like, we have no idea what's going on. Demand is not here. We are working. They're going to be talking about their credit facilities. That's what they're going to be talking about. They're not going to be talking about business and how it's going to come back in 2021. They're going to say how much capital we have to withstand this for another 3 months, 6 months. That's going to be the conversation. That's pretty scary. Yet, we're not seeing any updates from the sell side from these earnings. They're not updating these companies. So you're going to see these things missed by a mile when they report next quarter. And it's going to be a good opportunity for you to go short, especially now. At least some of these names. AMD, I think, is one of them. So it's a strategy no one's really talking about. People don't follow the sell side as much as others. I do. Ginny does. Kramer follows the sell side a lot. I mean, that's a consensus estimate. If you can find something wrong with that, you'll make money on stocks because that's what everybody believes. That's the consensus. When you put all these numbers together from the sell side, if you think they're conservative, you can make money. If you think they're aggressive, they're too aggressive, you can make money on the short side. So that's how you look at it. That's how you play this market. Again, it's not easy to find out those estimates, but most of these companies have not updated. I would look at the names in the S&P 500 that have outperformed the market in March and start there. Maybe you find a good 50, 60, 70 companies, a lot of technology. If there's software, leave them alone. They should do fine. They're cloud, they should do fine. AI focus, they should do fine. But if you're a hardware company, semiconductor company, I mean, a lot of these names have moved up the same as the Adobes, the same as the Microsofts, and they should not. You're going to see a lot of supply disruption still, and demand is falling off a cliff, and these guys are not reporting it, and the analysts are not updating their estimates. You see, we talk about a lot more about this, my live videos, the Curzio Research YouTube page. So, guys, that's it for me. Again, go to our Curzio Research site if you want that offer for Ginny's product, which is Money Flow Trader. Again, she's killing it right now, and the market conditions are absolutely perfect for something like that. We're also, marketing my Curzio Research Advisory newsletter, which we have a couple positions in. We're going to start building some of those positions. Again, sticking to things that we could see, but being very, very cautious and just going to start picking away pretty soon. Setting up a perfect portfolio for you for 3 to 5 years. Also on Ginny's, you're going to get access to the income product, which I think is going to be one of our biggest selling products as well. Again, interest rates is zero every place. People are dying for yield, and she's going to comb through these names to let you know which ones are going to suspend their dividend, which ones are canceling them altogether, and which ones are stable and the companies that you should be buying. So that's a fantastic product in itself. Again, want information, go to curzioresearch.com and just put your name in the box, and you'll get on an email list, and you'll see that offer. So, guys, lots today, longer podcast than expected. Again, I just want to explain to you the research that I'm doing here for you, trying to stay ahead of this. I feel like we're still ahead of this. Just be careful about the fear of missing out. If you really fear about missing out, then buy a couple of stocks here. I mean, I could be wrong. There's, again, I don't have a magic 8-ball that I shake and say, hey, everything's good and this is what's going to happen. But based on the uncertainties, it's pretty crazy out there. And I can tell you, common sense point of view, I can't imagine that this entire problem that's never happened before, that is so confusing, that nobody really knows what's going to happen, that there's no plan for, that we're throwing trillions at, is going to be solved in a month. And I mean, that's what you have to really believe if you're buying stocks here, because it's pretty crazy. So, guys, that's it for me. Questions, comments, frankcurzioresearch.com. Thanks so much for listening. Really appreciate all your support. Love you guys, and I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.